Yo, what is going on, guys? Bexio back, and today we got a brand new video. This time, talking about Bitcoin, and like always, we're going to focus on the fundamentals of Bitcoin because right now, all technicals and our short-term trading stuff points bearish and all of this different signals. But the whole story can be seen through fundamentals, where short term, maybe TA can work for you. Sometimes it's good, sometimes it's bad. TA short term might work, but long term, the fundamentals take over, and that's where you see the exponential rise of Bitcoin, the blow off tops, those types of things is when the fundamentals are doing good. So, starting right now with this price, we can see this is the Weeble chart. Again, this is the hourly chart. So, these candles, everyone's an hour. You can see right here, we held on to the 31,000. I think I said like 31.2 or 31.3 was supposed to hold, but we got the candle down. Ultimately, it was almost 31.2. Huge pump. We went to retail this like resistance right now. Honestly, we have to work our way up, get above this, and turn this back into support to kind of find a rally up to these next levels. But that's like TA. That's the short term stuff. And that's not what we're focusing on right now. We are going to look at the fundamentals and what makes Bitcoin, Bitcoin, and what actually pushes it forward and why it's important. So, to start off, we have the hash rate, and this is the computing power used to secure the Bitcoin network. So, this is terahashes per second. And you see, this was around this time was when China kicked out all the Bitcoin miners and they all had to turn off and they're relocating. So, with a huge downward move. I mean, this was over or about 50%. That'd be, yeah, about 50% of a fall here. And we saw, it was just like, when are we going to recover? And we see this point right here starting to go back up. These miners are setting up again. They are setting up in the US, in Florida, Texas. They're setting up in Kazakhstan. They're setting up in Canada. This is absolutely great for the Bitcoin network because it decentralizes mining and can get rid of that China FUD that everyone talks about. Everyone says, oh, China coin, China controls it, China can do this, China can do that. But they kick out their miners, so they can no longer even say that anymore. The hash rate does not live in China anymore. It's going across the world, and actually the US is actually picking up quite a bit of this hash rate. So that's going to be good. If the US can become a Bitcoin, like powerhouse, a mining country, and can actually get in front of this technology, that's where you'll see like the US continue to thrive. But if any country that like doesn't want to be involved with Bitcoin, probably going to be tough in the future. But we can see, what did this go from 84 terahash to right now we're at almost 100. So still down about 50% from where it was, but we're finally seeing the uptick, and that's what we want to see. When the hash rate recovers is when we could see the price recover. They're very correlated. So this collapse in hash rate followed with the collapse of price from like 60K to 30K. Makes a lot of sense that it would happen that way. And as we see the hash rate tick back up, we will actually be able to see the price tick back up. The security go. It's still secure network, like the most computing power in the world, even at these levels. But we need the hash rate to make a new all-time high for the price to make a new all-time high. They're just very correlated. And next we have these shorts. We showed this before. You could see this was 16,000, and I said I don't think Bitcoin can get pushed under 30 without 20,000 being short. And we held on to 31. We're heading our way back up. Hopefully, can flip 32, but we see this drastically down by 27%, while the longs are up. So that's good. People are longing Bitcoin again, and the shorts are coming down. Honestly, I do not think Bitcoin can get pushed under 30K without at least 20 to 25,000 short. And this is measured in Bitcoin. So this is 11,307 Bitcoin short. This is 52,738 Bitcoin long. So it's not USD, it's Bitcoin. So you have to multiply by the price to get USD. But these rates have been going great. This is the last 24 hours. See longs go from 52K with a good spike here. Not really correlated to the shorts going down, which is kind of weird. The shorts started going down way before this, but a big spike nonetheless, coming up to, what is this, 52,000. We're almost this number, so almost 53,000. While the shorts, steady decline. That's what we want to see. No more shorts. The shorts were at almost 25%. So you can see the shorts already 17%. So we're making moves in the right direction to see the price recover. And I'm just going to say it one more time. For the shorts, if we see 20,000 Bitcoin to 25,000 short, that's when they can start. I think we can start seeing the price get really pushed down. And it'll be short-lived. You know, if Bitcoin goes to 29, 28 again, it'll probably rifle right back up and the shorts will close and all that stuff that we saw happen. There's way too much demand for Bitcoin with anything with a 2 in front of it. So 20,000, 29,000, 28,000 people are really, really wanting Bitcoin to, or at that level. And we do have this here. Obviously, everyone's looking at this, the Grayscale's BTC unlock. I forget how much they're unlocking. I think it's like 40. I don't know the number. It's like 14,000 or 40,000. It's a big number. But what people are failing to realize, I think, is that these are institutional buyers. Some of them might sell. Some of them definitely might sell and you know, take whatever profit they have, even though it's not up that, it's up like 6 or 7% for the year to date. But I think that the majority of these people are institutional investors. They're long-term investors. I don't think this will have a big impact on Bitcoin. I think they release on Monday, so hopefully we don't see them all sell off, because that would be, you know, terrible. But the shorts and stuff not showing us that we're going to see that. You know, the shorts, I think, would be skyrocketing up if they thought that they were all going to sell. So hopefully we don't see the sale and we see them hold on to that. And I think that's what we'll see, because they're institutional investors. They're not retail investors. They're looking for big gains, not 6%. And we still have this trend with the balance on exchanges. This has been going on for a while now, but so it's kind of weird. I guess not super wild, like end of January, so a couple weeks now. But this is the flow to all exchanges combined. We saw, you know, huge increase. It stayed up here, and we've sent a steady decline, which is a good thing to see. It means we could see a supply shock in Bitcoin. We could see you know, the prices really rifle up from there because of low supply. Means you got to pay more if you want it, because there's not enough for people to buy. So supply and demand, simple stuff there. If we continue to see this outflow, I think we need to see it ramp up before we really see you know, a big price move on it. As well as with Binance getting attacked from like tons of governments and getting shut down, and people, banks not allowing transfers to it, there could be a large outflow from Binance, strictly because they feel like, or people feel like they need to get off Binance. So we'll see what the inflow looks like in like a week or two when people are done moving off of Binance. But hopefully we continue to see this go down, and Bitcoin gets harder to get, and that means the price has to go up to match that. And then every technology has had, you know, an adoption phase. It doesn't just come out and it's at 100% adoption. This is this chart for adoption of technology in the US from the 1900 to present. So you can see all of the lines and all of them, what they all mean and everything. You can see like the internet, this yellow line, one of these two yellow lines. I'm not sure. I think it's this one. And you can see really up there. And we can't imagine a world without the internet now. So Bitcoin is this one right here. So this is when it just came out, and we're starting to tick up. Bitcoin right now is at the same level that the internet was in 1997. So do you wish that you could have owned or invested in a piece of the internet in 1997, when, you know, the same amount of people who were using Bitcoin, about like 100 million or something, were using the internet? And a ton of people said the internet's a passing fad, don't need to worry about it, it's fine. And then it took over the world, and we can't live without internet now. So that's how I see Bitcoin. It's in the extreme early phase, and we will look back in 10, 20 years and think, man, how do we operate without Bitcoin? And then finally, we've got this chart right here. This explains it all, why you need Bitcoin. We'll go to the tweet right here. Nearly half of all dollars in existence were printed after the creation of Bitcoin. So that's this chart. This is 2008 right here, this like first line here of this color. And this is where Bitcoin was created, 2008. And you see the line slowly going up, and then it just explodes up. And this was the bailout of the banks, the 2008 financial crisis, the recession. Those things started quantitative easing and started just printing money and getting it out there and devaluing your savings. And we see continues to go up. And then it really continues to go up. And then we have 2020 hit, where quantitative easing, stimulus checks, all of that stuff, unemployment boost, it just exploded. And now it's just ridiculous the amount of money that's in the system. The Fed is buying junk bonds. The Fed is buying bonds, junk bonds. They're doing it all. They're printing money to prop up the stock market. It's flowing into Bitcoin as well. So you could say it has an effect on Bitcoin. But this money is just being printed at an insane level. And when you realize that, and you realize your savings, your decades of hard work, if you've been working and saving and you had a goal of something that you wanted to buy a house or buy something like that, and now you can't do it because somebody else decided to print a bunch of money, and now all assets just skyrocket in price. That can't happen with Bitcoin. This is why we need Bitcoin. No one can make more Bitcoin. No one controls Bitcoin. That's the whole purpose. But guys, that's going to do it for this video. Bitcoin, obviously, very, very important. In my opinion, these are the fundamentals. I think that they look great. Fundamentals drive everything long term. You know, stocks, crypto, real estate even, drives it long term. The fundamentals. The technical analysis can do things short term. But at some point, TA just wears off, and then it's the fundamentals. Is it a good project, a good company, and will it succeed? That's just what happens. So, as always, guys, don't forget to smash that like button and subscribe. We're on the road to 1,000 subscribers. See you guys in my next video.